Well, we're into a new year and there's no shortage of forecasts about what's ahead for our housing markets in this coming year. In fact, I've been running a series of interviews with some selected property experts over the last few weeks in this podcast. And today I'm going to replay a recent episode of my weekly Property Insider chat with Dr. Andrew Wilson, who's given his forecast for each state for both houses and units. And the reason I'm keen for you to hear this is because he's been very accurate in his forecasts over the years. So welcome to another episode of the Michael Yardney podcast, where I bring clarity to the chaos of the many mixed messages to help investors develop financial freedom through property. Now, if you're a regular viewer of this podcast on YouTube, you'd know that every Tuesday I have a Property Insider chat with Andrew. And again, as I said, that's what this show is about, because I hope at the end of today's show, you're going to have more clarity in what's ahead for the year to come and some insights in what could affect our housing markets. So let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Interest rates remaining higher for longer than most of us would have liked, strong population growth to strong jobs growth, continued supply issues. The property markets in our economy throw both challenges and opportunities for us in 2024. So now that we're in the new year 2025, what's ahead, especially for our property markets? That's what I want to discuss today with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael, and Happy New Year to all. Here we are, 2025, halfway through the decade, Michael. So
Yes. Gee, I remember when 2020 came and all the fuss that happened then. Well, I do want to talk about what's ahead for 2025, and we know that it's particularly difficult to make forecasts when you look at all the track record of others who got it so wrong a year ago. But let's have a talk about how the year finished off in 2024 first. You gave us your results from My Housing Market a couple of weeks ago, but let's recap how last year went before we move forward.
Well, it was a steady year, Michael. I mean, we expect housing markets don't really move in a volatile sense. You know, when we look at the trend, capital city housing markets we're talking about here. But we had a result just a little bit lower in terms of national prices growth, capital city prices growth over 2024. It was just a tick under 7%. Of course, we were just a tick under 8% the previous year, 2023. But that was the year following on 2022 when we had those first interest rate rises for a decade, and that affected the market, particularly confidence. But once confidence started to resurface, which it did in 2023, buyers came into the market, as usually happens in the cycle. Buyers come into the market first because they realise that there's value following a previous easing of prices, which we had in 2022. So buyers move in, take advantage of lower prices. Markets recover, and that's what happened in 2023. What was lost in 2022 was recovered in 2023. And then sellers start to realise, hey, this is a good time to get off sitting on our hands, get back into the market. And we then see an increase in listings, which we saw in 2024. And still plenty of buyers around. And we then built on that 8% growth in 2023, and we had around about 7%. So similar results there, but of course above the line now because it's not recovering from what we lost in 2022. That's what happened in 2023. We now moved ahead. So I think the prospects going forward, and of course it was assisted by a continuing 2024, was assisted by a continuing strong economy. We ended the year with the unemployment rate still below 4%. That's quite remarkable, Michael. In fact, the December unemployment rate was 3.9%. December 2024, which was exactly the same as the December 2023 result. So we remained over the full year in the threes. So even though there were some signs that unemployment was starting to trend upwards, we still ended the year with a very, very low, historically low a 3.9% rate. And by historically low, I mean anything with a 3 in front of it is historically low. And we do have...
And it's also got to be put in the context of more people in the workforce with a higher participation rate, as well as more people looking for jobs with a higher population, bigger population because of immigration.
Absolutely. And that's why it just didn't get any better, Michael, because not only do we have to go back to the early 70s to see a consistent period of 3% unemployment rates, and that was a completely different Australia, single income families particularly, and a much lower participation rate. But our participation rate, which measures the proportion of the potential workforce, that is all those that could be working, that are actually working, right? And that's the highest we've ever recorded, still at a level just below the recorded in September 2024. And as you said, in the context of, the resumption of mass migration, and I can call it mass migration, even though it's eased a little bit, probably concerns the government have that we don't have the infrastructure, particularly housing, to match those high levels of migration. But still, what can you do? You're getting hundreds of thousands of more people coming into Australia, finding work. We've got the highest proportion of our potential workforce actually engaged in jobs, and we have the consistently lowest unemployment numbers for 50 years. That, of course, meant that the interest rates were on hold for the whole year, even though, and we've been lucky enough to see, maybe lucky enough to see inflation, headline inflation fall sharply to under 3%, but a lot of that's been driven by the international price of oil, which is now half what it was at its peak and continuing to fall. And, of course, the government handouts for electricity bills, which have caused a record fall in electricity prices. And that's been what's generated that low inflation rate, headline inflation rate. But the underlying inflation rate still remains higher than the target for the Reserve Bank, which is 2 to 3%. We're at 3.5% and rising for underlying inflation. So not good sign there. And we do still have upward pressures internationally on inflation. So I wouldn't be counting in an interest rate cut too soon. But you never know what the future holds. But still, I still think that, the outlook, as we can see it with the current data, is clearly for interest rates to remain on hold. And given that we don't have the energy from lower interest rates or higher interest rates to make a significant change to housing market affordability, I think that we'll just see a gradual easing of prices growth this year, which is what we saw last year, Michael, compared to 2023.
Well, last year also was a very fragmented market. That's normal. There's not one Australian property market. There's not one Sydney or Melbourne market. So within each of the capital cities, things vary by houses, by units, by geography, by different price points. But there really, as we look at your figures here for the end of December, there were 3 outstanding markets for the year: Brisbane, Adelaide and Perth, Perth in particular, which had particularly strong growth. Sydney did well, and then the rest of Australia sort of struggled.
I think it's interesting when we analyse the results, particularly from the big 5 capital cities, Michael, which tend to be, less volatile, can we say, than the smaller markets because of, the actual volume of activity. But I think that when we look at, I think affordability is the key here for the top 4 markets. When we look at the median house prices of Adelaide, Perth and Brisbane, and we compare that, well, until recently with Melbourne and Sydney, they're still below, although not so much Melbourne, but still well below the Sydney median house price. And yet incomes in those capitals aren't too different. And I think that's the point we've got to understand, that affordability is positive in Perth, Brisbane and Adelaide, particularly compared to Sydney, because prices in Sydney are significantly higher and yet incomes are basically the same. And as we've said constantly here, one of the secrets of success of the Australian housing market is the market power that banks have, and that they do restrict lending, almost at the same levels through the cycles. So, and that means, your 80-20 loan to value ratios, restrictions on the percentage of your income that you can have for your mortgage repayment. And all this means that, it keeps a more steady environment for housing market activity. But having said that, affordability is important. And I think that's what's driven those big three boom markets of Adelaide, Brisbane, and Perth is their affordability advantages, Michael. As I said, they have significantly lower prices than Sydney, and yet their incomes are around about the same. With the exception of Perth, the incomes in Perth are significantly higher than those in Sydney and the other capital cities. So that means there's upside from those affordability advantages, particularly that Perth has. And I think that will continue in a strong economy to drive those housing markets, particularly the Perth housing market. I don't think it can reach the levels it has over the past 2 years, but I still think that they will be the leaders in prices growth for both houses and units over 2025. And, you know, when we look at the migration numbers, Michael, also, we can see, interestingly enough, that there's still plenty of migration occurring into into Queensland, Western Australia and South Australia. So we shouldn't underestimate the impact of migration still on those housing markets, those capital city housing markets of those states that are still experiencing strong net migration. So it's not just migration from international sources, it's also migration from interstate sources as well, Michael. And that's all part of the picture that I think will continue to drive prices growth in units and houses in Perth, Adelaide and Brisbane, but not quite at the same levels as last year. And that's only because of affordability barriers, because, you know, we've got the Brisbane raw median house price, and I don't want to get into the difference between a raw and an adjusted median price, but the Brisbane raw median house price is now higher than the Melbourne raw median house price, Michael. So that just shows you that the affordability advantages are starting to close in. They won't close in that quickly on Sydney, as they have in Melbourne. But so that's my story on those sort of top four affordability scenarios. Now, that leaves, as usual, one that we've got to look at that sort of doesn't fit that model, and that's the Melbourne model, Michael, which has really, really been an outlier in that term, in that sort of sense of analysis that we've used. So, you know, the Melbourne economy is doing fine. Its migration profile, not quite as strong as it has been, but still strong, you know, migrants coming into Melbourne. Its rental market has picked up quite strongly now. There's been big rent increases in Melbourne. So yields have increased, Michael. But what's happened to the housing market? It's still tracking a little bit sideways, Michael. And I think that this is where we get to that. You sort of the thing that you really can't measure or model, and that's confidence in that Melbourne market.
It's confidence in the housing market, but also in businesses. Victorian government has taxed anyone that they can grab money from. So property investors, where they've changed legislation more in favour of the tenants and taxed them if your property's vacant for more than 6 months, or land tax changes. But also small businesses have had difficulty in Melbourne as well. Some people are putting it down to the COVID effect. I think it's a little bit more than that. So yes, we're going to need a change of confidence. Andrew, it reminds me very much of the early 90s when both you and I were in Melbourne, and there used to be a joke, last person leaving Victoria, please turn the lights off.
Yeah, I mean, look, that's interesting, Michael, and it is about confidence. I think the thing here is, when we look at what will change it, is that at that time Melbourne had an horrific economy. I mean, its unemployment rate was pushing 14%.
Very different to now.
14%, and yet the Melbourne unemployment rate now is at 4.4%. It's actually creating jobs at the second fastest rate of any of the capital cities, Melbourne. So it's doing okay. You can't point to the economy here being the reason. That's my point, that it's one of those things you just can't really nail, and that's confidence. It's mindset that, you know, and when we look at the breakdown of the various price profiles in Melbourne, it becomes even more, you can rationalise it in terms of confidence, because it's those higher priced inner city property markets that are struggling in Melbourne. Now, that's not typically a response to the economy, or even issues such as interest rate changes or wage rises. That's more a middle budget price market. Now, the middle market and the budget price market, you know, eastern suburb, sort of outer east in Melbourne, the northeast, the west, the southeast, they're all doing okay, Michael. They've had reasonable years over the past couple of years. There's still plenty of buyers looking for value options in those markets. But it's the inner east, the inner south, and the inner city markets that have struggled. Now, they're the markets that really, are all about confidence. And they're the markets, they're not trading up, buyers are sitting on their hands. And it's interesting because I think there's two things that will drive that revival in confidence, Michael. And the first is obviously a cut in interest rates, because that will improve affordability, but more so that will start to work on the budget and mid-price markets, because that will energise them, because they're more about those sort of aspirational type of, change-up buys. But I think what will happen is as those mid-price markets start to grow with perhaps a cut in interest rates, those buyers, those trade-up buyers will start to realise, hey, we can afford now to get into those inner suburbs, which were off our sort of price list, and that will create I think, one of the sparks to people saying, oh, gee whiz, I can't believe how cheap prices are there. It'll start to move, and then people say, oh my God, they're starting to sell. And that's what we saw in Melbourne in the 90s, Michael, that once properties started to sell, in a subdued market, that created the fear of missing out. And it's the fear of missing out that will, I think, regenerate those areas in Melbourne. And I think that's coming sooner rather than later, because, prices are at points we haven't seen, for quite a while in those areas. And I do think part of what will drive the fear of missing out will be that the upgrader market from the outer suburbs or the middle suburbs will start to move into those inner suburban markets, Michael. And that'll be just that sort of that pebble that comes off the top of the mountain and creates the avalanche going forward. But there's absolutely no doubt that there's plenty of value opportunities in that Melbourne market. There's nothing other than confidence, in my opinion, that's driving that. Still a bit of a hangover from the COVID period. But as you said, also there are responses here to recent government policies that are also acting to subdue that. But that's why I've been perhaps a little bit more optimistic for Melbourne for next year in terms of last year, because I do think that is a value market. I think it's particularly the inner suburban markets. And I think it really reflects affordability advantages, which those parts of the market certainly have. And given the continuance of a strong economy, settled interest rates, in my opinion, and maybe even a cut, which I'm still not, I'm still not married to, that we'll get a cut, but let's say, particularly with this strong economy, that would be crazy stuff from the Reserve Bank. But as I said, I think that the Melbourne market represents some pretty good value next year. So I've taken a bit of a punt on Melbourne going forward, Michael, for those reasons I've just explained.
Clearly, there's intrinsic value in buying established properties in Melbourne at the moment, because you couldn't replace, whether it's houses or especially apartments, at the cost one can buy them at. And in due course, that will catch up. I guess the question is when that's going to happen. So now, each year, for the last 5 years, we've been running these Property Insider chats. You've put your forecasts with your housing market barometer out to the public, and you actually put your forecasts on the line rather than having an each way bet like some people who say, if this happens, that'll happen. If this happens, you've got to get it right. If you put 4 different forecasts out, one of them's got to be right. But in your case, Andrew, last year's you've been pretty accurate, which is different to many. Where do you think we're going to end up in 12 months' time? How's the market going to finish off in 2025, and how are each of the individual markets going to go?
Well, I think we'll get, as I said at the beginning, Michael, around about a 5% increase in the national house price, which is down on the 7% odd that we had over 2024. A lot of that is about the changes in affordability, because we're not going to have a significant increase in incomes or a significant cut in the interest rate. Although, there's still the prospect, I guess, even though I think it's reasonably remote, of an interest rate cut. So I think we'll get about a 5%. Again, it's very similar to last year. I think that given, as I've discussed before, those affordability advantages that Adelaide, Brisbane and Perth have, for both units and houses, we'll see them being the leaders. Not as strong as last year, mid-price range, around about 8% in Perth, Brisbane and Adelaide for both houses and units. I still think that Sydney market has strength, around about 5%, maybe a little lower on Sydney. I think Canberra, as with Melbourne, is a good value market for house prices, and I think they'll look at a rebound there of around about 4 to 5%. A little bit optimistic perhaps there. I think the risks there are on the downside. And Darwin and Hobart around about where they were last year at 3%. Similar results there for units. Sydney again, 5% increase, mid-range forecast. Melbourne and Hobart up 3%. Again, optimistic for Melbourne, but I think there's a lot of value, particularly in those Melbourne unit suburbs. But of course, we have the resumption of migration, which will increase demand, particularly in the unit or in the university sectors for unit rentals, which will push up yields, which will start to become, when yields in some of those markets in Melbourne, Michael, are 6-7%. So that's really a green light for investors, those sort of numbers. Also, I think we've got some upside for Canberra, which has had a flat couple of years for units, around about 2% in Darwin, which is volatile from year to year because it's a small market, up by around about 1%, Michael. So I think that the key, as you said, I guess when you're making forecasts, you can have all those variables, and it's like betting on every horse in the horse race and then declaring that you're a genius because you've got the winner. I'm not sure there's a lot of skill in that, but still we get that. But I think that the forecasting really for the housing market is about the variables, as we've already discussed. And I couldn't see, with a really strong economy, the Reserve Bank cutting interest rates, particularly with issues internationally that are showing a rebound in inflation, early days, however. And of course, a lot of talk from the new US government, new US administration, whether it'll happen or not, it's another story, about tariffs, and tariffs can always tend to be inflationary. So with the interest rate outlook looking sort of benign, and so I don't think they cut them. I question the interest rate cuts in the US. I'm not sure what the full story behind those were, given their economy is still strong. But nonetheless, their inflation rate is lower. So I would suggest that the key here is a lower interest rate, which may occur. Not quite sure the Reserve Bank can hold its powder dry. And we've got to mention one thing that may mean higher prices, Michael, not lower prices. And you know what is happening this year?
What's that, Andrew?
An election, Michael.
Of course.
So I think the government is very much aware of the angst in the community in regard to the chronic undersupply of housing. I think the relief that we've seen in our rental markets lately, and I wouldn't call it relief, but certainly rents have started to flatten off, thankfully, is because people have just given up rather than any more supply coming in, which we're just really not seeing. And I think the government will continue, as they've done with the electricity handout. They'll continue to try to, fix the situation. So that might mean some stimulus for the housing market, Michael. So look out for that occurring in our election year, because I think they'll be primed to do that, because governments around the world, particularly advanced economies, are experiencing the same problems with house prices and rents, undersupply of property, and their electorates are all giving them the thumbs down, Michael. And I think the federal government will be well aware of that, and they might initiate some programs to help the housing market. So that will only mean higher prices, Michael. I don't think they want to go into an election with lower prices.
Well, first of all, the government doesn't want the housing market to slow down and crash, or even drop a little bit, because that's not going to be good for them. And all those stimulus packages the government brings out, one after the other over the years, they bring short-term benefits to those who take advantage of them, but in the long term, they just make the property markets more expensive. I guess they're kicking the can down the road, as one says, Andrew.
Got to get back in, Michael. That's the name of the game, and you got to do what it takes. So look out for that, folks.
We'll be back each week to discuss that on these weekly Property Insider Chats. Thanks, Andrew. Well, Andrew had some great insights, and if you don't subscribe to my YouTube channel, if you only listen to this podcast as an audio on Spotify or Apple or wherever, why not subscribe to the YouTube channel as well? Because each week I have a Property Insider Chat with Andrew Wilson, and you're going to be able to get his insights. But if you're thinking of kickstarting or growing your investment portfolio in 2025, I hope that our chat has given you some insights into what you should consider. Now, we spoke about Melbourne being an underperforming market for the last couple of years and having some great upside, but there's not one Melbourne property or Brisbane property market or Sydney property market. And even before we talk about location or the type of property, by now you know that at Metropole we start with a big picture strategy. So some of the latest predictions may make you change your mind, or at least consider doing things differently this year. But my suggestion is that before you even do that, have a chat with one of the wealth strategists at Metropole to discuss your options. You see, we're much more than buyer's agents. We're big enough to tip the scales in your favour, but still small enough to care. And when you have a complimentary wealth discovery chat with one of our wealth strategists, we'll explain to you how we start by putting a strategic plan together for you. We help you plan to become the person you plan to become. And since we've got no properties for sale, what we do is customize a solution to suit your specific needs using our time-tested strategies, frameworks I've fine-tuned over 5 decades, and we've been helping clients with for over 26 years now. You see, property investment's a process, not an event, and we don't chase the next hotspot. Sure, we spoke in this show with Andrew a few minutes ago about why Melbourne has got some great opportunities, but it's not right for everybody. So let us help you take advantage of these new markets in 2025. Why I say new is we're moving to the next stage of the cycle, and what worked over the last couple of years may not work for you in this year, and what would be right for you won't be right for me. I'm at a different stage of my cycle. So that's why we've got a plan, and then help you implement the plan. Go to metropole.com.au.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I'd like to share with you an old story that I came across just recently that I found interesting. The story of a scorpion and the frog. Look, you may have heard it yourself before. A scorpion sitting on the bank of a river, unable to cross to the other side because it can't swim. And the scorpion sees a frog in the water and asks, "Can I ride on your back to get to the other side?" The frog's understandably hesitant and replies, "No, you'll sting me." And the scorpion was ready for this concern and answers, "No, I won't do that, because if I sting you, we'll both drown." The frog, convinced of the response, agrees to the arrangement, but when they're halfway across the river, the scorpion stings the frog in the back, and as it starts to sting, the frog asks, "Why did you do that? Now we're both going to die." And with its last breath, the scorpion shrugs and says, "I couldn't help it. It's my nature." Now, the most common interpretation of this story is that we should trust our intuition about the danger somebody poses to us. The frog's instinct was correct, but was swayed by the words of the scorpion, which put the frog in danger. The scorpion is the person whose nature makes them dangerous to you. Never let their words convince you otherwise. Look, I like an additional thought about that conversation. We're all scorpions in our own way. We've got certain aspects of our nature that are likely to be dangerous to somebody else out there if we allow them to be. But we should never hide behind our nature. We should never say, "I couldn't help it. It's my nature." You see, my message to you in this session today is you are not your nature. You are your actions. You are in control. You get to choose. To hide behind our nature is to give up that power. So my suggestion is take that back. Take back that power, because you're not your nature. You are your actions. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?